the playbook that's associated with these two sectors, give us a call, drop us an email, and we'll give you a sense of how we're expressing our views on these two sectors via investment funds and investment positions. So this is more of a high-level sector review or briefing. Okay, let's get into it. Cybersecurity, we all know the problems and the issues. Soaring numbers of online and mobile interactions. Clearly, that's going to have more and more attack opportunities. Clearly, we're not getting away from data anytime soon. Data breaches that threaten people and businesses, as well as damage north of $10 trillion annually is the expectation by 2025. That's an increase of nearly 300% versus 2015 levels. So substantial increase. But the way we're thinking about this is, okay, well, if we know there's going to be spending in cybersecurity, what's the best way to play it? And therefore, we want to be investing in some of the companies, or the vended market, as they call it, that help provide solutions for cybersecurity threats. And that particular spend on cybersecurity solutions in 2021 was $150 billion, and is looking to increase at 12.5% a year for the next 10 years. So we got a long runway of opportunity here. And again, the reasons for that are somewhat obvious. You know, we have Internet of Things, you have cloud, you have network and applications. You can't get away from data. That is everything. It's everywhere. That's our lifeblood. That's what powers our economy and our lives. So with that comes risks, and those risks are paramount to someone's digital footprint, their business, their lifestyle, and to that end, we need to protect it. There are 5 drivers of cybersecurity, the opportunity to invest in cybersecurity. The first one, as I mentioned earlier, is the frequency and the severity of cyber threats. They're up 2x in 1 year, and they're becoming more sophisticated, as you'll see in a moment. The cost of cybersecurity solutions are also growing, and that's growing at a 15% CAGR. You have bad actors and nation states trying to get into our waterworks or meatpacking. You saw the Colonial Pipeline disaster. So there are external forces coming knocking as well. Number 4, protecting our digital world from ransomware, a big deal. And what are you going to do if you're a small business and you get a ransomware situation? Not much you can do these days. And then think about that from a supply chain perspective. It becomes very worrisome and frankly inflationary, I believe. Be that as it may, there has to be solutions to protect and to utilize, and I can't imagine anyone not spending the money to have that solution. And then finally, you have the regulations and compliance from the government and from regulatory agencies requiring a heightened awareness of cybersecurity threats. To that end, 45 states and Puerto Rico have introduced more than 250 bills to significantly deal with cybersecurity. There's been executive orders, there's been a DoD certification that came out. So a lot of it has to do with government and regulatory agencies pushing it, and then you got the pull of the fact that there's it's your data and you want to protect it. So that combination of being pushed by regulators to do something, and the fact that you got to do something anyway, is a perfect storm for those companies that provide those services. Mega trends across every segment in the information technology industry, and cyber is the problem that the C-suite worries the most about. Now, we surveyed 4,000 mid-sized companies, and they showed nearly 40% of the observed malware they have never seen before. That tells you that the bad guys are getting more and more sophisticated. And to that end, the good guys, the solutions, have to be always on the cutting edge. And we'll see a slide on that in a moment. At a 10% penetration of security solutions today, the total opportunity is $2 trillion. So We're only 10% to that goal of 150 billion. We got to go to 2 trillion. Well, here it is. There's a long way to go. And so that's where the opportunity set is to say to yourself, okay, we're here now. This is what we penetrated this vended market with. What's the vended market? Oh, here you go. Data protection companies, email security awareness. You've got businesses that focus on network security and cloud security, web security. These are all businesses. These are all companies. These are all opportunities. You have to weed through them, find the right ones. But look at the penetration rates they have currently to this massively growing TAM. So you got a double win here. You got a growing market of opportunities, and you got the fact that there's a low penetration to that growing market. So as you get more penetration, plus it grows, you get a double win and a double opportunity to grow your revenues. So lots of opportunities in this space. This slide speaks to that. We're about $115 billion in spending in 2020, and then we're going to as high as $250 billion in 2025. So that spend rate's going up dramatically, and as you saw previously, it can go as high as 2 trillion. So we've got a lot of runway here and a lot of opportunity. But again, going through and finding the winners is the key job. This shows you how important it is to have cybersecurity in the more regulated industries, and you'll see that more regulated industry is growing their need for cybersecurity solutions even faster than the less regulated industry. They're all going to have it, but obviously something like banks and firms like ours have a heightened awareness of cybersecurity. And this is a slide that I mentioned earlier about innovation. If the bad guys are constantly innovating their tools, their ransomware, their malware, we, the good guys, have to be that much more vigilant and resolute in finding those solutions. And a lot of those come from the innovative side of the economy and the lab work. And this shows you the number of patents that are increasing in certain fields. And you see more and more patents, you're going to see more and more growth, or you'll see more and more innovation that will lead to more and more growth. So it is a very interesting area to be in. Okay, so that was the quick briefing on cybersecurity. And again, please reach out to us to learn more about how we are putting this to work and how we are affecting a portfolio that's focused on cybersecurity solutions. We're happy to chat about it and to give you some ideas about that. Let's talk about distressed debt, what it is and how does it work. So let me start with this slide, which speaks to the changing paradigm between old and new. And you've heard this from me in the past. We've been talking about this for the last 2 years. We're going from a period of time where we had low disinflation, the accommodative Fed, low commodity prices, and we believe that we're on the other side of that. We believe that there's going to be a stickiness and a pervasiveness to inflation, largely due to the deglobalization that's happening around the world. We used to export our inflation to the emerging markets, and now that's less likely, and we're nearshoring now, and that's inflationary. And of course we have the ascendancy of labor and the strength of labor, which is also inflationary. But the big thing in our book, and what we're thinking about, is the net zero movement, which really brings inflation to the next level, because it's going to be really expensive to mine those minerals and those metals for us to get to a green globe. So again, this is just a reiteration of that. We're going from globalization to deglobalization. Demographics aren't great either, or the graying of the United States. We've talked about that. That's also inflationary. We consider all of the the non-productive folks that that would be out of the workforce. Monetary policy, it was restrained. Now it's less of that, or now it's more restrained. It used to be very expansive, and we're still seeing that. And then geopolitics was calm. It's far from that these days. So with all that said, this slide shows $12.2 trillion of global lower rated debt corporate debt. And that's the TAM, that's the addressable market, if you will, for distressed debt investing. This is their sandbox. And they go in there and they look for these companies with bad balance sheets for good businesses. And they come to them and they say, you've been eating too much at the trough of low interest rates. You have too much debt. Let us reorganize you. And in doing that, they get really sweet, they get very constructive deals to do that. And that's how distressed debt makes a strong return going forward over time. But it does take time. This is another state of affairs as it relates to distressed debt. Here we're talking about debt loads that swell during the era of cheap money, as I just mentioned, and as a pile of troubled bonds and loans already surged 360% since 2021. This is exactly what distressed debt buyers and investors and funds that focus on that sector is looking at. So this is an opportunity to buy the lowest rated bonds. Again, they're bonds, not stocks. So you have collateral. You're senior on the cap table. You're collateralized, and you're buying this bond that this company has that is in stress, and you're helping them reorganize. And then, of course, you're going to get perhaps some warrants for the upside on the equity, as well as your bond position will increase as well. So it does work out to be potentially opportunistic. And from our view, less risk can be associated with this sector because you're buying very deep value. You're buying with a margin of safety. You're buying bonds, so you have definitive safety in that regard, because they're also collateralized, so you have assets behind it. So again, it's not investing in cash or treasuries. That's far from it. But from our lens, distressed debt, especially now, poses an outsized opportunity versus the risks. And this speaks to that, where issuance is falling to 12-year lows. So there's been no new bonds out there to refinance the existing. So here comes distressed debt funds and firms to help do that restructuring. And then this slide, the last slide, speaks to just that as well, about how over the last few years, we've seen more and more higher rated bonds expand. And that is where the opportunity set exists for distressed debt buyers. So this is a briefing about two important, here's our disclosure statement, about two very important sectors of the economy, both cybersecurity and distressed debt. Please reach out to us at ALINE Wealth to find out more information on how we are expressing these views on these sectors with our clients' portfolios. We believe it's an opportunity. We believe it's something that has a risk profile that's manageable. Look forward to chatting again. Have a great summer.